Good morning to all traders and welcome to another Daily Market Insights provided to you by Orbex. Today is Friday, end of the week, and the 23rd of August. It's been an interesting day yesterday, to be honest, considering that the markets are muted, pretty, somehow muted, but there is volatility rising. There is quite a few reasons that we see markets, market flows changing all the time. In the US, following the beginning of Jackson Hole Symposium, there were a couple of FOMC members, speaking Fed members, being not as dovish as expected. That, of course, was not seen as bullish. Is actually becoming a little bit worrying because the markets are now scared that the Fed might not cut as aggressively as they expect, and that is going to affect the economy in the longer term. Now, on the European side, there was some sort of support from developments around Brexit, also from positive PMIs, better than expected, let's say, not positive. Now, on the Brexit side, Bojo, after accepting Merkel's challenge, he expressed a lot of confidence that there is going to be an alternative found within the next 30 days to replace the backstop. Obviously, that hasn't been the case for 2-3 years now, so I don't see how that's going to happen in the next 30 days. So I'm a little bit worried about whether the pound is going to continue moving higher for much longer. That is good because actually confirms our labeling and Elliott wave analysis. We're expecting another correction and then prices to move a little bit lower. On the economic calendar today, we'll have Mexican GDP, the Canadian core retail sales, and new home sales from the US. Of course, this is the #1 highlight, not for the day, only for the week, and until the Fed, the FOMC decision on in September's interest rate decision. Okay, so I want to start with euro dollar for our charts. We were here, WXY expected correction here as we actually saw last. It was either Tuesday or last week. We're still moving within the analysis pretty much we've done. Now, the thing is that we see this correction lasting a little bit longer. So we're creating a range. It looks like an ABC, a combination ABC. It can be a flat, or it could even turn out as a zigzag, the second part. And that is because on the 1 hour, if not mistaken, yes, there is a very nice signal for a bearish move, which means that A, B, and C, B would be here, so it will be here, and then this work can start looking for buys to at least 112. That will be around 110.50. Okay, our original idea, of course, might change. That might not turn out to be a correction, but indeed a 1, 2, 3. That could be a reversal point. Considering this is quite impulsive as well, that could be the case. Depends on Fed. Now, the pound. Bojo managed to get these moving higher a little bit up. That actually completed wave A for me. So we're looking out for wave B correction and then C on the deeper side around 124 or so, where we're going to likely see a very nice bearish signal for another move to the downside to complete wave 5, which means that could be wave 3. Then wave 4, and then wave 5 down here. This is the same exactly idea as we talked about yesterday for GBPUSD, and that could be very possible considering that we've had wave 1, 2, that could be 3, 4, and 5. Okay, wave 3 must always be, of course, bigger than wave 1. Sometimes it is than wave 5 when wave 5 is not extending, but in most cases we see wave 3 being much larger by both. So yes, I'm expecting this to move a little bit lower. Now, how this can happen, if we go a little bit lower on the 1 hour, we've had a similar pattern here of a combination, a little bit more of a correction, a little bit more biased to the upside compared to euro dollar, I would say. And here, since we received that nice signal, now I'm expecting a correction to wave B and then a wave C. Most likely is going to be impulsive, so that these stop losses are taken out at 123.80, which is also the invalidation level. Okay. Now, down on the dollar yen, we're still 1, 2. We're expecting wave 3 in the longer term. This is, of course, a WXY. Okay, it's not labeled, but you can consider that labeled now. What we are going to see, of course, now we had wave 1, 2. I think this is going to become wave 3, and then 4, and then 5 for another move to the downside. Of course, we need to break below 104.64 for that to happen. If that is the case, we're looking really at moving 103, 102, even 101. We're very close to the January low, and we will definitely I can't speak with certainty much. I will say we could go down to 104.64, the 2019 low, to take out stops before we move a little bit higher. And of course, that is going to give us more clues whether we're going to continue lower or not. If this is impulsive and then we get a retest, okay, and then price move up, then we're looking at 2 ending there and we're going for 3. If we get some sort of false break and price move lower and range between here, we're most likely going to see another break. It's probably going to be an impulsive 5 wave, or it could end like as a triangle. But you know, this wave has been quite, you know, it took quite a while for that to be another one of those cases. So most likely going to see wave 5 being very short and very sharp. And down on the 1 hour, we don't see much difference here. It's just wave 1, 2. We expect wave 3, 4, and 5. Now, this is where we are standing at the moment. This is it could be an ABC, right? Which means that it would become an expanding triangle, expanded flat, which most likely going to have a deeper correction. So that will be wave 2, 3, 4, and 5. If that doesn't happen, most likely going to see prices staying within, below that high, okay, and continue lower with wave 3 ending around that level. And then I would expect a wave 5, just a false break before prices start moving up. So I want to thank you for watching for another day. And as always, I want to remind you to keep an eye on our blog, is where we'll cover the latest ideas, provide all the necessary tools traders needs, and also, of course, trading ideas.